Hello, friends. This is E. Giuliano, and we are nearing the end of day, Tuesday, the 11th of January in the UTC time frame. We're going to close the daily candle on the Bitcoin pretty soon, maybe even during the course of this video. Yep, I'm here to share with you Bitcoin price chart and do some technical analysis, basically give an update on where I think we are, what's happening here. So yeah, none of this is financial advice. I'm just someone just like you learning about technical analysis, and well, I'm sharing what's going on based on my perspective here. And so I hope this is informative, educational, and entertaining for you too. Maybe something we'll find it to be that way. I'm going to load up the BTC most recent daily that we've been looking at, and it's the same one that you just saw. Okay, so just quickly here, where are we and what might be happening, and how can we know if we are correct? How can we know if we are wrong in our current assessment of things? Right, that's basically the idea. One thing is true: the market could go up, the market could go down, like the price, whatever. It could go sideways. With it, there's up and down, whatever. We don't know which way the market could go, but there are probabilities. And that's why, people have studied market structure for decades, century, of study on the science of crowd psychology and the way that markets move in waves and that kind of stuff. So here we are today. This is the Bitcoin price chart. And based on what we've been seeing here is a strong potential that we are in a C wave of a flat ABC pattern, okay? And if you want more info, check some of the previous videos on that. If you want to see some thoughts on some of the popular altcoin charts, you can check out the recent video from earlier today around that. So where are we here? It looks like there's a really good sense, if this is correctly counted as a C wave of some sort of flat pattern here, then it looks like we have a good potential for a first wave, a second wave, and still within a third wave. Okay. If we're incorrect with the counting, well, then there's a strong chance that actually this could be the bottoming of the bigger move here, and we could start to see the next direction forming itself. That is possible. I do think, based on how it's looking and how it's shaping up, that there is still the pattern. I have to trust the initial sense that I had. And so I'm going to go with that until something invalidates it. Now, one of the big senses that I'm having is that this is some sort of terminal pattern, which kind of triangulates and wedges and narrows, because the momentum is being lost after this huge cycle of down and up and down, flat pattern correction. After that huge, balancing of the energy, if indeed this is a C wave of a flat pattern, which is creating the fourth wave, corrective wave of a 5-wave move, then we would expect that we're going to be going higher. Okay, fine. Or at least making a final impulse, whatever that would look like and whatever that would mean time-wise and price-wise. So in that sense, though, there's a chance that this would be terminating. And the reason I'm saying that is because when we pull up the line chart, it's fine. The one wave ends about here. Actually, here when we count it, so it ends like around here. But the thing is that that's fine, because if it ends around here, then the price has some ways to go in the fourth wave potentially of the move here. If we're making this 1, 2, 3, 4, 5 move, then this fourth wave here, we would generally, in an impulse move, we wouldn't want to see it break into the price action of the first wave. Does that make sense? But if it's terminating in some sort of terminal pattern, then those waves can start overlapping. So we can have the fourth wave overlapping with the one wave, okay? So that's one thought. Now, one of the reasons I'm thinking this is because when we add the candle wicks, the intraday trading price falls all the way down to here. And so in that case, if we are currently in the fourth wave of this bigger degree, the red degree, if we're in that fourth wave, then in that case, starting to trade within this price range seems like it is trading within the one wave. So in that case, the way that I can sense a rationalization about it is if this is some forming of like a termination here, and the fourth wave is overlapping with the first wave, and it's that kind of a move. So that would be one way where that can happen. The other way is that if we're not quite done this red degree third wave, and instead we're still working on the fourth wave of this green degree. Let's get in there a little closer. So potentially, and interestingly enough, if you check the previous video, we were around here, and I was saying, well, there's a chance that it feels like there's still something left in the move, and indeed, the price did dump down, wick down a little bit further here even into the 39s, like 39.8 or whatever it was that was being traded at. But eventually, it even closed higher than the previous closing low. So on the line chart, it doesn't show that here. But when we get to the candles, we can see the intraday price action. So significant as it is, I do think that this move here, 1, 2, I think there's a good chance that the 3 ended here. We are in the 4, and we're working towards the 5 after the 4. That is one option. Okay, that's one option. In which case, we are not quite done the third wave, and it would be ending wherever this fifth wave ends. Then we'd be into the fourth wave, wherever that's going to take us. And in that case, there might even be room, if the fifth wave is low enough, like into the 30,000s here, like a 38,000 or something like that, then that's low enough that even the price might be able to stay away from this one wave as it retraces to the fourth wave, or in the fourth wave towards this level. However, currently the price is already trading within this wick, you see. So does it even matter? At this point, I think it's confirming that it's more of a terminating. If it is a 5-wave move, it's more of a terminating wave move than a more impulsive move that that isn't considered a terminating wave. There's a reason why there was a type of impulse wave which was considered a terminating wave and had slightly different properties, and that's because it might be this type of nature. So imagining then that this move is actually over, and we ended up having like the fourth wave here, and then the fifth wave is down here. That's also possible, definitely possible. If that's the case, all right, then this third wave, the red degree wave, is finished, and we are moving into this fourth wave currently. Now, why might we, when we look in the 4-hour, let's look in the 4-hour to, oh wait, sorry, the daily, let's start with that, but let's bring down some of that noise there. Okay, why might we consider that we're still within this green degree of move of impulse, where we're still in the fourth here and going after the fifth? And that's because we really have never come to play with the 0 to 2 trend line yet. So on this smaller degree, we haven't really, we created a 0 to 2 trend line potentially, but we didn't either bounce off of it again or breach it. And more likely we'd be looking to breach it. So even on a breach to the upside of this current 0 to 2 trend line, that could still just be the fourth wave, still could be the fourth wave of this green move. Okay, let's actually give it the green color. So in that sense, we have the 0 to 2 trend line. We're going to interact with it on some level so that we can create a new 2 to 4 trend line. Like that's what we'd be looking for if we are getting a subdivided impulse. If this daily price level is not the right time frame to see the impulse, and instead it looks more like a zigzag or whatever, then and then because, you know, like for example, for whatever reason, maybe your 3 is here and your 5 is here on a smaller degree, right? And now you'd be in your 4, or sorry, you'd have made your 4 here around here. So that kind of idea, like that's possible, whatever, on a higher degree that might not catch the intricacy of the move, okay? But I still think the significance of, where did we go with that 0 to 2 trend line? The significance of this 0 to 2 trend line is enough for me to consider that the price, you know, let's watch it interact with it. We can, within there, the lucky thing is we can determine if we are, eventually we can determine if we're in the bigger 4 wave here or we are in the still in the smaller 4 wave. And I think that will have to do with time, because then we're going to start looking at the time of this 2 wave here. You know, if we're looking at this down move, right, from the top 69K, this potential two wave here takes some time. We can look, maybe there's some alternation, maybe there's some similarity there that provides, you know, a bit of an understanding of what size, what time frame would it take to go from 3 to 4, because basically the move from this 3 to this 4 shouldn't be much bigger than this one here. Yeah, if anything, maybe at the most twice as big, you know, maybe 3 times as big if you really are saying that this is, you know, yeah, but at this point, that's what I'm trying to say is, you know, these waves should match with each other in degree, okay, that idea. And then in that case, we'll know if we're coming down for this 5th or not. Okay, that's, wow, it's taken me a long time to explain this, but I feel like it's part of the ideas that I'm putting forth here. In order to understand what's coming next potentially. Because we'll look at the 4 hour and we're going to see, is this move just going to fizzle here around this level, or does it have some legs to get up to this 46,000 level? You know, previously maybe we fizzle around like a 43 or 44,000 level. We'll see. Based on the momentum indicators and on the like RSI and MACD, it looks like, sure, we're going to know pretty soon whether we're going to turn around and do a fifth wave smaller degree dump, or if we're going to just continue to churn with this 4th wave correction here. So we're going to see that pretty soon, but we need to watch the 0 to 2 trend line, that's for sure. And we want to come in here and take a few thoughts on a shorter term time frame. So when we come in here, I'm going to just get rid of some of that noise here. Well, it's here, like, you know, yeah, like what's this going to look like as we work through this potential correction? Maybe, right, if this is the end of the 3rd wave here, even like, it's funny because, wait, let's go to the candles first. Okay. In that sense, you might want to say that this is the end of the 3rd wave, right? So in that case, are we going to make, if that's the case, are we going to make, because yeah, in that way you might have like a 1, 2, a 3, 4, and a 5 here. In that case, are we just going to make a zigzag simply and then go to a 5? I don't think so. I think that would be too small of a degree, especially like you look at this 1 to 2 wave here of this smaller green degree. And in that case, from the 2 wave potentially here, it seems like it might need to make a bit more of a complexity. Now, maybe if the 3 ends here instead, but that wick, like these wicks, wouldn't make sense as much that way. So I like the 3 potentially ending here. If not, then the 3 ends here and the 5 ends here, and that makes sense. Then we're definitely gonna, then the 4 would be here, and then we're definitely gonna have a churning and a bigger degree of moves similar to this. So fine, but I'm gonna maintain the argument that we're potentially still in this 4th, and 5th is potentially gonna come here. People are too ready for the market to turn around, and maybe the market's just going to continue to tease them a few more times. So there's that idea. We're watching this 0 to 2 trend line. And then we are also watching on a smaller level here. We're watching this move here. Currently, it has made basically a 1-to-1 move. So yeah, I don't know. That's interesting. Just something to consider. Now, if we take it with the wick, you might be saying, we haven't quite made a one-to-one move, and it'll be interesting to see where a one-to-one move brings us. So the one-to-one move brings us here around 44,000. The 1618 brings us to 46,000. So these are two key levels here that we're going to use in our formation of this small, like a green degree 4 and the big red degree 4. And any of these levels could come into play. So yeah, that's something to consider. And that was based on the wicks for the one-to-one and the 1618. Now, if we take again just the closing levels, again, this is on a 4-hour price chart now. If we take just the closing levels, then we see, for example, this move here is, again, it's one-to-one, we said, if we go internal relationship. And then the 1618 would be here around the 44,000, and the 2618 would be around 45,000 here. But anyway, yeah, it's about like the 1 and the 1618 for this 4 relationship on a closing level. Okay, so look for that, and also that provides this as a potential continued resistance. So that's the other thing, is we're looking to break above this level here, 43,400 on a closing basis, and that tells us there's a good likelihood we're making it up here to the 46,000 level. That's my sense on that. But yeah, let's watch what that happens. Because if we're in a fourth degree here, sorry, a fourth wave here, then we're looking for some sort of correction that's not as big as this previous red degree 2 wave. Okay. Now let's imagine and the other thing is, we make our move down. Like, does this work as an impulse down? It was this one here. So we made more than a one-to-one, okay? And if we take it from here, sorry. Then we made, yeah, like just a bit more than a one-to-one if you want to pull from there, okay? And basically, fine, we can allow this to be our third wave. But in terms of a fifth wave, if there is going to come a fifth wave, let's check here and say, all right, maybe the third wave is here, fine, on a closing basis. And we make our way into a fourth wave. Let's say we break the 0 to 2 trend line and everything, but we only make it, let's say, on this smaller degree to like the 44,000 or 43,500. Let's say we reject around here or something like that, but let's be generous. Then I think if it were only to make it to a 61.8, that would get to a 40K. But if it were to go down like pretty far, we're looking at 35,000. That's if it gets to 44,000 on this fourth wave retrace. I don't think it would get that high, though, to be fair. I feel like maybe something along the lines of, no, yeah, you know what? Maybe not. Why not? Like I said, it could even really, if it wanted to, it could push towards that 46,000 level. But I think 44 is fair. So let's use 44 as a reasonable estimate there. And we can make this fifth wave again down towards this 40,000 if it's like about 61.8% or somewhere in between. But I imagine it'll be smaller than the third wave. And if it's one-to-one with the first wave, imagining, take it from there for conservativeship. Yeah, again, like a 39,000, like it breaks. I imagine if it's coming to 40K again, there's a really strong chance that it's going to want to break down to the 39s and below. So we'll see how that works. But yeah, that would be roughly a one-to-one on that first wave. And but I get the sense that, especially because the one wave is so close to the three wave, that the fifth wave would probably be weaker. You know, it would probably be that 61.8% level around the 40K or just to high 30s. Anyway, but if we start using the candles, and we take this wick here now, then we look at something like this three wave, we're using the wick, then we can say, all right, now this is starting to look like if we are pulling in, we might be really pushing into these 30,000s. And yeah, the other option is if in fact the fifth wave will be extended, then we're going to definitely get lower into like the 38,000 level. We can take a look here again using the line, and we can take this this whole one to, oh, sorry, we're just looking at the three wave. I mean, yeah, the 1, 2, 3, 4, 5 of the three wave, and we would say, yeah, like if we're going 1 to 1, that's when we start getting around 35,000. That's where, like, okay, this fifth wave really is a place of breakdown for the price. You start looking at 36,000, 35,000, and it becomes actually the extended wave of this whole pattern of this red degree three wave, the three wave of the red degree. All right, that would be an extended fifth wave. So that's another possibility there. We're going to watch for that happen. And yeah, so that's something to consider. And that's about it. So those are some levels that we would watch for. But of course, first of all, it's the 0 to 2 trend line. Whoa, what happened there? Anyway, yeah, we'd be looking for the 0 to 2 trend line to get its interaction. The other thing I wanted to mention is, let's imagine for one instance though that we are done and the 3 was completed here and the 4 was completed here and the 5 was completed here with that wick. That's fine. Our 3 was completed here and now we're in the 4. Let's imagine that's the case. What's the earliest that we might be looking at this 4 to complete? So, because look, at a certain level, if we start breaking into this level significantly, you know, and it starts making 46, 47, 48, 49 into like 50,000. And now we're really breaking into this one wave and reaching higher like this. Then I think at that point, it's really not easy to call this continued fourth wave. So I think that's one way, is that if the price gets violated enough to the upside, we can start questioning the count and saying maybe it's actually complete. And we are now moving out of this. And in fact, this 5, you know, belongs back here if you're counting it even as an impulse. Maybe the whole flat pattern itself doesn't work. And maybe in fact, it becomes a 3, an ABC type of 3 that allows, or just a complex 3, depending on your time frame. And that allows for the bigger triangle to still take place, because we're still around that area where if you really wanted to, this could be a 3, not a 5, a 3 in terms of like Elliott wave impulse correction. It could be a 3, a correction that participates in a triangle, a 3, 3, 3, and then another 3, 3, which would complete it. So this, it's still possible. So this could be a rounding out and a finishing of this, and our count might not even be accurate. So as we watch it progress, we'll have a better idea of what we're into. So that's part of the reason why we do things like Elliott wave, is to have a better idea of the likelihoods, of the probabilities of the market structure. Because like you said, you know, it can go up, it can go down, it can go sideways, don't know, but having ways of identifying market structure and likelihoods helps. And just having confirmations, you know, these rules of the Neowave logic are very helpful because they provide a good sense of the market activity. So, all right, so now potentially, let's say we are done and we've done this third wave, red degree third wave, and we're working on this fourth degree third wave, and I guessing we're coming anywhere between 44,000 and 46,000. If we're on the fourth degree, I'm thinking like something close to the 44 or 45,000 feels most right. But anyway, that is what it is. If it goes that high, maybe we don't really make it back down into the 30s on this fifth wave. Who knows what it would look like? And we can check from then. But yeah, let's say maybe it goes to the 44,000, 45,000, whatever. Okay, something like that. Around when might that happen? Like, how long would it take? What can we watch to see if? Because if we break this trend line here and the price rockets up past this level very fast, that could be a signal that this wave is turning around. Well, at least this whole move here is turning around. And because we have a previously marked out, and where did it go? I don't know where everything went. Did I like accidentally get rid of things? Since we have a previously carved out 0 to 2 trend line, okay, that would help us to understand, you know, is this 4 wave going to interact with it in a way that it just touches it here? Or is it going to take a bit longer and get beyond this 0 to 2 trend line and maybe get up to this 46,000 level or wherever it's got to be, even 47, 47 and a half, whatever. And from there, then it'll turn around and then we can make a 2 to 4 trend line like that, you know. And then once the fifth wave comes into play, right? Once that fifth wave comes into play, then this 2 to 4 trend line should be broken very violently to the upside, and you know, we should get our confirmations like that. So the Neowave logic helps a lot. These 0 to 2 and 2 to 4 trend lines helps a lot. So let's watch. Yeah, we have that 0 to 2 trend lines so far, based on our current count. And so where will this 4 interact? What will happen? So in that sense, let's see, maybe something along the lines of, if we count this 1 to 2 move, so the 2 wave on a time frame here, this is again a 4-hour time frame. We count the 2 wave, then let's imagine this third wave ends here. So now the 4th wave starts here. Boom. Here is a 1 to 1. So like the 2 wave and the 4th wave would actually be equal. And I guess that's possible for sure. There's not so much alternation maybe in time. Then in that case, it would be a similarity in time. Maybe the alternation would be price or construction or severity. And if we want to look at some possible retracement levels from here, that's about a 50% level. 47.5 is about 61.8. So that allows for a further downtrend. It maintains the trend and the momentum. So I'm thinking, yeah, once you start getting to the 61.8 level here, then you're definitely looking at a turnaround potential for the price overall. And what this whole move down here could eventually potentially be considered a spring as it comes back up. But let's just take a bigger degree from the very top retracement here and say, yeah, no, I don't think we're ready to retrace the big move. The big move retracement though would bring us to a 51,000 if we were, you know, somehow going there, but that's too big. That would be a 1 to 1 on the smaller degree. So then I think then we're definitely done, you know, if it goes all the way to 51,000. So, and then at that point we can start thinking differently. But until then, okay, we're looking at this time level here, the 2 wave compared, if the 4 wave starts here, this would be 1 to 1 around the beginning of February. And then we could look at a bit more dumping into February for this 5th wave, whatever that will look like. Maybe it'll be a failed wave. Maybe it'll be just a short wave, whatever. And then here, all the way in the end of February, here, 28th February timeframe, we have that the move up equals move down 1 to 1, where, you know, this whole flat pattern, whatever it would be looking like, would equal the same time frame. It would have taken the same amount of time as the whole move up from back in March, okay, from March of 2020. So that would confluence where, you know, you make your 4th wave here, your 5th wave down, and it's around this time frame. It's in this cluster of times when now the market turns around on a significant scale, on a significant degree. Okay, so that makes sense. That's one possibility there. If it's not going to be as long, maybe it's only going to relate by 61.8% or something like that, then we're looking at the end of January as a potential length of time for this, what might be considered move up in this 4th wave correction. And yeah, that might be the case for sure. And in which case, then it'll be interesting to watch it interact with this trend line and see what happens there. This the previous 0 to 2 trend line. And that's about 61.8% of the time compared to the 2 wave. So this feels nice. And then 161.8% of the time compared to the 2 wave is here. And that would be around the February timeframe, around the 17th of February, in which case maybe the 5th wave would be down here. But I don't think it's going to take that much longer, because especially if the first move here is the more extended wave, we're going to expect this time to take less time. We're going to expect this correction to probably be the bigger time frame correction, but we'll see what happens. So in that case, I think best, longest might be 3rd of February that we have this uptrend. So it might happen for the rest of the month, maybe just to the end of the January month, last week of January, maybe until it turns around and starts going down. We'll see. So we're going to have to watch that. Okay. That's in terms of the 4th wave potential here on this red degree. If we're looking at, comparing this 1 wave with this 3 wave on the red degree, okay, we're comparing this 1 wave with this 3 wave, then interestingly, what we can do, we'll just go back to the daily so we don't take up too much. Actually, no, the 4 hours fine. It shows us a lot of the data points, and it spaces things out for us. So if we take that 1 wave and compare it with the 3 wave from the beginning of the 3 wave, roughly, right? This is a rough estimate, but we are basically terminating around 61.8% of that time frame. So that feels right. That feels decent, actually. It feels good in terms of proportions. It seems logical. So in that way, maybe this is exactly where we are. And I think this is a really good opportunity, especially we see on the daily price chart. There's a strong chance that the momentum is shifting towards a positive histogram, green histogram, and crossover of the signal and MACD line. So that's significant. This time frame, it's a daily time frame. I think that's worthy enough of a 4th wave correction on a down C move downwards. Okay, that makes sense. Does that make sense to you? I hope so. So in that case, this seems like a good likelihood that this is where we are right now, that we are in the red degree 4th wave. And if not, then we'll know very soon, because this will turn around within this next week or so. It'll turn around to show us the 5th wave of the green degree and the ending of this 3rd wave. But like I said, this feels pretty solid right now, timing wise and look wise, proportion wise. If we take the 1 potentially to the 3, even the price is very nicely around 61.8% closing prices. So from close to close, when we look at the wicks, then it starts to be a little bit less similar on that level. But anyway, so just some thought there. I think that's it. I don't have much else to say. I did want to share that on this smaller degree here. If we take, it's tough to see on the daily where this might end, but the December 29th seems to be the level. So we'll just use that time frame, and we take it with this 3 wave starting here, and maybe I should have done it on the 4 hourly. Why not, right? Why not? So I'm just going to redo that. We're going to take our fib time tool, and we're going to take on this potential red 3rd wave here. We're going to take, I know it looks like it wants to be like this. So on the 4 hour, we can use this 31st of December. Fine, we'll do that. And we'll compare it with this potential wave here. And again, if this is an extended wave and we're waiting for the 5th, then that makes sense. And maybe the 5th is going to come around somewhere near here, where it'll actually, the wave will be maybe 2 times or 161.8 longer than the 1st wave, the 3rd wave will be. But if not, then this makes sense. We're ending around right here, okay, which is roughly around the 61.8%. level. That's cool. It doesn't have to be exact, and you know, it's not necessarily to predict anything. It's just to look at proportions. That's all, really. It's to look at the proportions and see if it makes sense proportionally, and it does. So that's fine. We can work with that. Okay, and I think that's it. I think I don't have anything much else to say. Look for the 44,000 to hold as a resistance, but ultimately probably around the 46,000. And who knows how long that's going to take. The faster it goes there, and if it starts breaking above that, then we can reassess and start to recollect. But otherwise, everything seems to be going as we might expect. Okay. Based on potential likelihoods and probabilities, based on our assessment of the market structure, based on Neowave, Elliott wave principles. Okay, yeah, I hope this helps. I hope you've gotten something out of this talk. Stick around for more. If you haven't subscribed yet, then do subscribe. I look forward to bringing you more of this type of content. I'm very intrigued and interested in it. And yeah, I look forward to the next one. All right. Take care. Yeah. Wishing you love, peace, happiness, all that good stuff. All right. And until next time, goodbye.